How to read a rent roll, a beginner's guide. Well, a rent roll is one of the most important documents in commercial real estate. Whether you're a new investor evaluating a deal or a business owner leasing a space, understanding how to read a rent roll can make or break your decision. Now, in this guide, we'll walk you through what a rent roll is, why it's important, and how to analyze it like a pro. So, what is a rent roll? Well, a rent roll is a detailed record of rental income for a property, typically listing each tenant, their lease terms, rental rate, and payment status. It serves as both a snapshot of income and a management tool for property owners and lenders. Now, why rent rolls matter? So, for an investor, it shows what the property's income is, the property's income potential, as well as the stability. For lenders, we use it to verify income during financing. But for property managers, it also helps track occupancy and lease expirations. So a rent roll can reveal red flags such as frequent tenant turnover, below market rents, or also high vacancy rates. Now, let's talk about the key elements of a rent roll. While formats vary, most rent rolls will include the tenant name, the individual or company leasing the space; two, the unit or suite number, which identifies the location within the property; lease start and end dates, which shows the term of or the length of the term for the lease as well as the renewal timing; monthly rent, so whatever the agreed rental payment is; any CAM or triple net charges. So CAM's common area maintenance or triple net expenses are also can be paid by the tenant. Also, the deposit held, what they've paid for security deposit; their payment status, whether their rent is current or delinquent. And in this next section, how do we analyze that data? So first, we're going to compare it to market rents. Are the tenants paying market rate, above or below? We look at the lease expirations. Many leases ending in the same month can be a vacancy risk because you're going to have some potential income hurdles to challenge. We review the tenant mix. So seeing a diverse tenant base reduces the risk in a downturn. We also verify the occupancy rate, looking for consistent high occupancy over time. We match it to the income statements, ensure that the reported rent matches the reported property financials so that they tie together. And this next section is the common red flags at a rent roll. So if we see multiple delinquent tenants, if we see multiple short-term leases with no renewal options, or if there's heavy reliance on the single anchor tenant, or if there's a significant gap between the actual rent and the market rent. So here's our next section, the pro tip for beginners. When buying a commercial property, it's always best to request the rent roll and review it alongside the property P&L statement, the 12-month P&L. This ensures that the property's income claims are accurate and match what they're showing on the rent roll. And this last section is our final takeaway. Now, understanding how to read a rent roll isn't just a technical skill, it's a profit-protecting habit. And by mastering this document, you'll make more informed decisions, negotiate stronger deals, and avoid costly surprises. My name is Bill Rapp, eXp Commercial. If you need a real estate broker, commercial real estate broker, please reach on out. Thank you for your time.